Are your crypto bags ready to moon, or are they doomed to gather dust for years? Well, let's be real. Watching your portfolio flatline while you manifest a magical pump is the ultimate hodler's nightmare. But what if we could map out the future, or at least statistical odds showing where we might go? Buckle up, because we're diving into 3 wild scenarios for when crypto might hit new highs. The bull case, the base case, and a bear case that'll make your blood run cold. Okay, so stick around, because the last one's a total apocalypse scenario, but one that you do have to have on your radar, just in case. Let's kick things off with the good vibes. Okay, we all like good vibes. The bull case scenario, where we're popping champagne, booking first class flights, buying new Rolexes by mid-2025, right around the end of the second quarter. The start of the show, well, it's the global M2 money supply. All the cash sitting in checking and savings account, plus short-term investments like small value certificates of deposit maturing within a year. By late Q2, really by the end of April, we expect M2 to be the main driver of this crypto moonshot. And as we start catching up in late April, we push into May, push into June for the next peak, potentially. And why not? Money is the fuel of the economy, and the M2 is the rising tide that lifts all boats. Now, let me ask you this. Why are you even in crypto or stocks? Because you want that sweet ching-ching, right? You want to make your life better. Guess what? So does everyone else. Because money makes the world go round. You've also probably noticed the M2 is always kind of creeping up and to the right over time, but there are big corrections within it, which we've seen and lived through recently. Central banks cannot resist their money printing addiction. So what's the big deal? Sure, M2 grows long term, but the real magic is that in the acceleration of that growth. Think of it like this. Driving across the US on Route 20, 3,300 miles of open road in front of you. Fantastic. Your odometer's going to rack up the miles no matter what. But how fast you get there, that's the game changer. Are you cruising at 40 miles an hour? Are you flooring it at 100? You see, with M2, the speed of growth is really the secret sauce. Sauce. Right now, the US M2 is the biggest economy in the world, of course, growing by 3.86% in January 2025, and is picking up steam. Better yet, the global M2 just hit a new all-time high, which means risk assets are going to catch up at least 83% of the time they do, which in theory should be pretty fantastic for the price of Bitcoin, the price of your dog coins. Fart coin's going to go to the moon, guys. So why does it feel like we've been stuck in a crypto slow lane forever? Economics, silly. It's all about the economics. It's all about lags. Our pal, Raoul Pal, see what I did there? He nailed it. There's a 10-week lag between M2 growth and BTC price spikes. And despite Trump's reciprocal tariffs dropping in April, Q2 still has big potential. In fact, the dropping of the tariffs is probably going to be the moment that lets the markets free, because we have certainty. Now it's all behind us. FundStrat's Tom Lee thinks April could be a market winner, and I'm inclined to agree. Word on the street is that the tariffs will be narrower than expected. Plus, OPEC Plus is set to boost oil supply, which could cool inflation and give the Fed more room to cut rates, adding even more liquidity into the mix. Now, guys, let's get real here with the base case, okay? That's the bull case. I'm a bullish person. I like the bull case. Base case, slightly less bullish, still bullish. Crypto peaks in Q4 2025. New highs maybe grind up in a few months, but don't go crazy. I'm saying like 110, 115. But the big roller coaster up, that's later this year. We need a big washout in stocks still. The S&P 500 maybe still needs to go down a bit in July, for example. We actually technically hit a bear market or something like that. Why would all this happen? Well, more on that in a second. First, though, if you are trading cryptocurrencies, guys, make yourselves an account over on BitUnix. Best damn place to be trading crypto coins. They got all the big coins there. Bitcoin, Solana, Ethereum. They got all kinds of hot new coins as well, whether you're talking about fart coin or anything else that you want to be trading. You can do that. You can long the rips in the market, short the dips in the market. And when you use that link down below exclusively, you're going to get some insane deals. $10 for free to sign up to your account. You're also going to get 20% deposit rebate. So you deposit $1,000, get $200 back, and up to $2,000 in trading bonuses. Very limited time offer, expires in a few days. So if you want to take part of that, you better get signed up. Okay, so let's talk about Trump's tariffs. The tariffs are going to come in April. but it's actually way worse than everyone thinks. It's going to not just spook investors, it's going to crush markets. Goldman Sachs research projects that Trump's 4D chess will likely cut S&P 500 index earnings by 2 to 3% during Trump's first term. The S&P 500 fell by a cumulative total of 5% on days when the U.S. announced tariffs in 2018 and 2019. Those tariffs are peanuts when compared to the numbers being floated today. We're talking about like super mega tariffs. And since the S&P 500 drops, you can be sure Bitcoin and the entire cryptocurrency market will drop right along with it because we're super correlated these days. But in the end, nobody wins a trade war. There is possibility the tariff war gets some kind of resolution later in the year. Maybe the EU and Canada strike deals with Trump. He dials back after a few wins, whatever it might be. As far as we can see, countries are willing to work with Donald Trump, and a lot of this, again, may be resolved by April 2nd anyway. But you see stuff like cartel activities in Mexico and Trump's different gripes, and these find resolutions to some of this stuff. Remember, Trump's a businessman at the end of the day. If the terms are good, he'll probably scale back the tariffs, which in turn could be a big boost for all risk assets. Plus rate cuts and all that stuff are coming, but that's not until like May or June, and it doesn't immediately impact the economy, but markets are a bit forward-looking, so maybe they'll start front-running that narrative. Now, JP Morgan research projects that the Fed will hold steady until June before cutting twice, bringing the target range for the policy rate to 3.75 to 4% by the end of the third quarter. But of course, even if we get a rate cut by June, you don't expect the market to insta-mega moon. Again, economics lags are expected. The Fed's a titanic iceberg and it moves quite slowly. The lower rates will, though, help thaw the U.S. housing market, which could stimulate a lot of moves in the economy. Think more home buyers by fall, boosting confidence in the economy overall, people getting better jobs because of all the investments, factories being built, stuff like that. By December, that economic warmth lifts risk assets again. Crypto will again be partying. Very interesting. And of course, the end of the year coincides with the 4-year cycle where we'll be seeing a pico top for the market 500 days after the last halving. However, there's also the possibility that if we have this sort of longer drawn out cycle that we actually don't top until like 2026 or something like that, or we just become much more mature as an industry and we have peaks with local stock market peaks and bottoms, local stock market bottoms, and just slowly grind up into the right over time, which we've kind of done anyway. But maybe this whole 4-year mega bear market situation is over. Maybe. But I can certainly see the, let's say, the hypothesis that we have a 2026 Q1, Q2 top not being that crazy. Remember, a lot of the global M2 analysts, the analysts out there, those guys are thinking that, well, maybe M2 pumps all the way into Q1 or Q2 of next year. And if that's the case, your risk assets going to go right along with it, aren't they? Just something to think about. Now, that's all fine and dandy, but now it's time for the Goblin Town scenario, okay? We like the rosy, nice-sounding stuff. Let's take a grim trip down to the place where nobody likes to go, Goblin Town. Trump's tariffs go full-on disaster mode. A U.S. recession happens, which, by the way, is nobody's base case right now. It's an extremely unlikely scenario. But the first scenario gets torn apart as April 2nd tariffs spark a full-blown trade where everybody loses their minds. No deals, no backing off, just pure chaos, pedal to the metal chaos. Everybody just ramping up the tensions. Countries retaliate, supply chains collapse. Global trade turns into a total shit show. World War III happens. Oxford Economics warns that lengthy trade wars could slash global investment by 1/10, which is massive because we're talking trillions of dollars here. It's like the 1930s Smoot-Hawley Tariff Act all over again. The Smoot-Hawley Act actually worsened the Great Depression instead of helping. And since the tariffs will increase inflation, the Fed will sit on its hands and not go through with the 2 planned rate cuts, keeping rates higher for longer, screwing over the housing market, screwing over businesses, and basically causing a situation of tearing of hair and gnashing of teeth. They will eventually do it, but it's all going to come too late. It'll be cuts in the middle of a crisis. We'll see stocks fall, go super, super bad. Whatever numbers you have in your brain, just multiply those by like 10. And yes, we become dedicated community members again, hold on to our dog coins for another 4 years, watch them just slowly go to zero, never come back. By 2029, hopefully we climb out of this mega abyss. Maybe Bitcoin hits $150,000, which we'd expected to do in the previous cycle. So look, this is not my base case by any means, but I think we have to talk about the bearish case because it'd be irresponsible not to. But I think the real strong case for a mega recession, a new Great Depression, a super bear market, it's just not super strong right now. There's so much counter data to say, no, this has probably just been a big growth scare and the tariffs will probably be not as bad as expected and all that kind of stuff. So my case that I'm looking for, I'm bullish. Of course, I'm always bullish, but the case that I'm looking for is the first case, where we actually start seeing new highs in, let's say, May or June, right? And then some big summer correction after that, and then new highs again in Q4. Not bad, right? Even if we get the second scenario, also not bad. But I'm just not on board with the super mega bear scenario. And I know that some of you guys are, okay? But I believe we have new highs this year. I don't believe that it's over. I don't believe that $110,000 was the top of tops. The macros, the indicators, everything is saying we're going to go higher. Yes, Trump's 4D chess bullshit is a wild card. He could either orchestrate the biggest economic boom in history, which, yeah, I'm on board with that, or drag us all into the ninth circle of crypto hell. So here's my thoughts. Keep cash on hand. You never know what's going to happen. Economic turmoil does always end, though, and the best way to play it is by scooping up discounted assets. Anybody who bought Bitcoin at $78,000 probably laughing right now. On the flip side, if we hit new highs this year, remember to take some profits. Don't just screenshot your vibing portfolio. Get your damn money out of the market. Let this recent crash be a lesson to you. Screenshots don't pay the bills and they don't buy you a new Ferrari, okay? Nobody's got a crystal ball, but preparing for possibilities is what lets you survive the market even in the worst conditions, okay? Lets you stay in the game without having to sell your assets for a loss. So which scenario do you think we're gonna get? Drop your comments down below. Thanks for watching.